This is headline of the news. Definition of finance. Branches of finance. Two pillars of finance. And finance decision.
Good day. I am Maria Carmela Makabudbud.
And I am Razel Jane Ferrer. And
This
this
is
is
the IFM News
Report.
Are you wondering who the father of modern finance is? He is Eugene Francis, or aka Gene Fama. He is an American economist whose works build the foundation of financial economics and have been cited widely. Quick trivia: financial activities date back to the dawn of civilization. Banks and interest loans existed as early as 3000 BC, originated in the Babylonian or Sumerian Empire, where temples and palaces were used as safe places for the storage of financial assets. Grain was the currency of choice in the country, while silver was the preferred in the city. Meanwhile, coins were being circulated as early as 1000 before Christ. While it has roots in scientific fields such as statistics, economics, and mathematics, finance also included non-scientific elements that liken it to an art. So basically, finance is a term for matters regarding the management, the creation, and the study of money and investments. To better understand the finance, I'll give you three important things that you should know. First, finance can compare in a time travel machine. Why? Because you can save money now to use tomorrow, or you can use credit to use today what you earn tomorrow. Second, using finance correctly will protect you in case of trouble, like falling sick, having an accident, or losing your job. Third, finance gets money from people who have business ideas but don't have enough money to realize them, right?
Yeah, that's right, partner. Do you know that there are three branches of finance? First one is the financial management that tackles about how you manage your finances. Second one is the capital market that you can lend or borrow money. Third one is the investment that you can put your money works and grow. To better understand the three branches of finance, let's welcome Miss Mary Joyce Lara for her report.
Thank you, Miss Carmela and Rachel. So the first branch of finance is the financial management. As its definition, it involves the planning, directing, and managing of the enterprise's financial activities, such as the purchase and the use of funds. It entails the applying general management ideas to the company's financial resources. So there are two types of finance. There are corporate finance and the personal finance. There are corporate finance. From the term itself, corporate, that involves managing the assets, liabilities, revenues, and debts of a business. While the personal finance defines all the financial decisions and activities of an individual or household, including budgeting, insurance, mortgage planning, savings, and the retirement planning. The financial management have a goal. So the first one is the profit maximization, or the profit after tax. Profit maximization is the capability of a business or a company to earn the maximum profit at a low cost, which is considered as the chief target of any business and also one of the objectives of financial management. According to financial management, profit maximization is the approach or process which increases the profit or earnings per share, or EPS. More specifically, profit maximization to optimum levels is the focal point of investment or financing decisions. And the second goal of financial management is maximizing earnings per share, or the EPS. EPS is the portion of the company's profit that is allocated to every individual share of the market. It gives much importance to investors and people who trade in stock market. The higher the earnings per share of a company, the better its profitability. While calculating the EPS, it is advisable to use the weighted ratio, as the number of shares outstanding can change over time. The last goal of financial management is the shareholders' wealth maximization. The principle of shareholder wealth maximization, or the SWM, holds the maximum return to shareholders and ought to be the objective of all corporate activity. From a financial management perspective, this means maximizing the price of a firm's common stock. Since most of the people are confused about the finance and accounting, back to you, Miss Razel, to explain further what is finance and accounting in Chika Mo Yan.
Thank you, Miss Mary Joyce Lara. Let's talk about finance and accounting. Some people question if finance are same as accounting. The answer is it might be yes and it might be no. Yes, because some function in accounting or in a finance is closely related. Second, no, because some function in finance are different from accounting. To differentiate the finance and accounting, let's differentiate in how they can record a transaction. Finance use a cash method or a cash flows, that's basically the inflow and the outflow of a cash, while accounting use accrual method, that is where they doing a proper record in each transaction. Let's take a look in this example. When you are a dealer of the house and you sell the house at 1 million pesos but in credit, so basically 1 million is uncollected. And when building a house, it costs 500,000 pesos. This is how finance and accounting will record an income statement using cash method and accrual method. First, the finance using the cash method. Sales record is 0 since they don't get a cash. Cost or the expenses is 500,000 since they already paid the cost and cash been out. So basically, using the cash method, the net loss was 500,000 pesos. While in accounting, using the accrual method, sales recognized at 1 million pesos and cost of 500,000 pesos. So basically, you have net income of 500,000 pesos. So that's it in differentiating the transaction method between accounting and finance. I hope you learned something from Chikamoyan's segment. So let's take a closer look in second and third branches of finance. Miss Carmina Aklan reporting.
Thank you, Miss Rachel. Now let's proceed with the capital market and investment. Capital markets are the institution that allows entrepreneurs to borrow their capital here if they have insufficient capital. It allows the transfer of funds between a supplier and the one who needs them, whether in the form of bonds or stocks. According to the encyclopedia, an investment is an asset or item acquired with the goal of generating income or appreciation. Appreciation refers to an increase in the value of an asset over time. When an individual purchases a good as an investment, the intent is not to consume the good, but rather to use it in the future to create wealth. Let's take a look at this scenario to briefly discuss investments and the two pillars of finance. To properly digest and understand the topic, Melanie is a 25-year-old corporate employee of an advertising agency that focuses on print advertising such as brochures, magazine, and more. Due to the pandemic, the advertising agency experienced bankruptcy. She lost her job and decided to put up a business in line with her past job. She decided to put up a small editing studio. An investment is made when a person chooses to put up a business. Investment is putting capital to work in the form of time, money, effort, and so on.
with the expectation of reaping a bigger return that was first invested. Also, always take note that investment can result in a win or loss. So as an investor, we must also consider security analysis, portfolio theory, and market analysis. This is where you study and analyze well if the investment business will be viable in your target market. In this scenario, it tackles the two pillars, which are the risk and return. The lower the risk, the lower the return. The higher the risk, the higher the return. So that's it. Before you invest, you should understand the financial decision. Mr. Michael, your report is?
Thank you, Ms. Carmina. For my topic is finance of decision. First is investment utilization of funds. It begins with determination of the total amount of assets needed to be held by the firm. In other words, investment decision relates to the selection of assets on which a firm will invest funds. So organizations need to be properly planned and prioritize the purchase and replacement of the various fixed assets through capital budgeting, profit and loss analysis, opportunity cost analysis. Second is financing procurement of funds. The procurement function is about spending the money well, and the finance function is all about keeping the balance sheet in the black. For the best possible outcome, the two departments must work together and align their goals. Organizations that allow departments to function as partners give themselves a competitive advantage and often see the improved business performance. Third is dividend and distribution of fund. A dividend is a payment made by a firm to its shareholders, either in cash or in kind. Dividends can be paid in a variety of ways, including cash, stocks, or in other assets. The board of the directors decides on a company dividend, which must be approved by the shareholders. The fourth and the last one is working capital decision. In simple words, working capital signifies the number of funds used in its day-to-day trading operations. Working capital primarily deals with current assets and current liabilities. In fact, it is calculated as the current assets minus the current liabilities. One of the key One of the key objectives of working capital management is to ensure the liquidity position of a firm to avoid insolvency.
Thank you, Mr. Michael Magdaluyo. So, to sum it up, finance has a really important part as individual or in a corporate world. So, stay mindful and smart in managing your finance.
That is for today. Your knowledge will make you stronger with
IFM
IFM
News.
News.